Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, President, and founder of the Oxen Group. The Oxen Group is a financial analysis and investment ideas firm located at www.theoxengroup.com. Please check. On tonight's Oxen Group Nightly, we'll be talking about our market wrap-up for Friday. We'll be looking at our position in complete productions as well as our position in ASML, also some of our other current positions and exits. We'll also be looking at a earnings report that we put out today about quarter one fiscal year 2011 earnings preview, and we'll be looking at next week's forecast as well as a disclaimer at the end of the video. Well, the market suffered today for sure. Oil broke 110 per barrel, and the government's threatening to shut down. So it combined for quite a drastic pullback on equities. Honestly though, I think the pullback that we had today was a very healthy pullback. We've been rising and rising and rising and rising. We've hit this kind of resistance line that we hit, back in February, early March area, and we fell off that. This time though, we hit it. We fell down a little bit today, regained some of it. I think the key thing for this is we're at a break. We're at a point here. We're at a pivot point. And we can either go down or we can go up. And it's great because we're about to hit an area where we're going to have a lot of news, hopefully some good volume coming in, a lot of potential. We're going to get to see how companies are affected by Japanese market. We're going to have the ability to see how companies are affected by higher oil prices. We're going to get to see all this stuff happening, and it's really going to make or break the market. I think if earnings are as good as I am expecting them to be, this could be really a very good catalyst to get this market going. I think that we can battle through higher oil prices. I think the speculation that you can't buy this market because of higher oil prices is not legitimate, because I do think that there are those groups of stocks and those companies that are going to be threatened by that. But there, in any environment, there is always a trade. There is always an investment to be made, and I think we can find those. But the government continuing to battle over the spending bill. I mean, I watched some of these clips about this today, and it's just, you look at these guys and you're just like, are you kidding me? I mean, they can't. They're battling over. It was like less than 1% of the entire spending bill. It's a group of company, a group of information about women's health or something like that, and it's just like you look at these guys and they say, oh, we're working so hard, except before this Democratic press conference, they just stood there around there for 15 minutes waiting for all the people to show up. Like, what are they? Like they're working so hard. They got 15 minutes to just stand around and do nothing. Like, it's just a joke. The whole government shutdown. The problem though is that it does have an effect on the market. It doesn't, I think, have any long-term effects. I think that in the end it's going to get rolled over, and it's a quick, maybe a quick pullback, and then we fill that gap, that dip. But it does have some effect, and I think if it continues to loom past Monday morning, it might have another impact on Monday. I hope it's not a drastic impact. I hope it got somewhat priced in today. But it is important, and that oil going to 112, 113 and after hours. I mean, that's going to continue to weigh on the market as well. One of the interesting things that we saw today was wholesale business inventories to sales ratio rose today, and that was good to see. These have. That was not good to see, but it was interesting to see them rise, and that kind of affected some of your larger home goods stores and some of your large grocery stores that hold a lot of inventory. So interesting to see those rising. I think February was kind of a month where we saw a lot of kind of economic data sort of kind of not be as good as we had seen in the last few months. And in any kind of recovery process, you're going to have those months where you're going to kind of taper off, just because you can't just go parabolic for forever, or can it? As we're looking at this chart. But you're going to have those ups and downs, but the general trend is going to be one way or the other. As we've kind of already touched on this, but the market dropped all throughout the day. There was really nothing for it to rally on. Just we had oil, we have ECB stuff still. We've got the government shutdown, and we've got basically no catalyst coming out today. But the market did rally a little bit at the end. Kind of was like, okay, we've had enough of a pullback. There's some buys now. We'll fill some of this dip here from some of this gap down, and that was good to see it rally at the end of the day. I thought maybe we were just gonna fall off a cliff right here. I thought like this government's not shutting down. Well, it just keeps going up. Like maybe everybody's just gonna be like, I want to out of this market. But luckily, we were able to get a little bit of a rally close to the end of the day, and I think it sets us up nicely moving into next week. We're pretty much neutral for the week. Nothing really happened. It really is a week where you could just have, eh, and everybody's setting up for earnings, and I think it's going to be really the next catalyst, the next what's going to move the market next. But we were able to have a couple very very solid positions this week. Some of our positions really rallied significantly. Chang Yu, as you remember, was up over 7%, and then today Complete Productions. We got into this yesterday at 28.53, and the reason we liked it, it's actually one of our top 5 picks for earnings season. So we did an equity analytics, which is part of our company. We do a lot of financial analytical work on companies, comparing companies on various ratios. We create our own ratios and sort of find companies with very strong growth with good value, and we like value investing here. So we're looking for companies that have good balance sheets, good financials, strong growth, good free cash flow, and then at the same time they have undervaluation, so they're not performing as well as their sector, or they're not performing as well as industry average would have, or they're not performing as well as we expect they should be performing. And so one of these companies that one of our top 5 for this earnings season, maybe this earnings season, is Complete Productions. It's an oil and drilling company that's going to be increasing their earnings per share by over 1,000%, and the company just looks very, very solid to make lots of moves up. And as you see from this chart, we bought it here. The stock moved back to this downward channel. It was like, boom, this is a perfect buy. Got into it yesterday at 20.53, and the stock rallied on the higher oil prices today as energy stocks continued up, and we were able to sell. We harvested. We were looking just to harvest maybe 2% of gains on our position, and hit the 2% target, hit the 3% target, hit our 5% target, and we were out. And that was a great, it was going to be a nice little swing trade, we thought, for a few days, and it just all happened in one day. So it was really great to see. And some of our members, didn't get out until 7 or 8%. The stock went up, I think, almost 9% at one point today. So it's just huge position for us. We also took another half position entry into ASML. This is an Dutch semiconductor company that's reporting earnings next Wednesday morning. We're very bullish on this company. This is another company that we had rated highly in our we had a high rating on in our earnings preview that we did that came out this morning. And the company, it's done very well. They're in the lithography sort of section of semiconductor equipment, and this has been a huge sector that's grown a lot as semiconductor chip sales continue to increase year over year. There's a high demand for semiconductor equipment, things that make semiconductors, and so they create a lithography system for creating semiconductors. And one of their huge clients is Intel, who is spending billions and billions of dollars this year on their semiconductor business, and so they continue to see a lot of growth, and this is a company that's jumping significantly. I think over 300% on earnings per share year over year, and the stock. We bought it because look, it's at a bottom, and you see it right here. This is a technical bottom. It's a strong fundamental company, lots of growth. A price to earnings ratio that's a future price to earnings ratio that's supposed to drop to about 10, which is well below the sector. And you're looking at a tech company with a 10 PE ratio for future price to earnings. That's a company that definitely is screaming this is a buy. The stock's been was weakened on today's news. And then the Dutch market had a late sell-off today, and this also trades on the Dutch market, and so that really affects what it does on the American market. But the thing is that it has had really pretty light volume comparatively to what it usually has, and so it has light volume, and so which means it's not a good or a bad thing. On one hand, it's bad because it's not getting the volume that we want it to get before it moves into earnings. But if you look right back here at the last time, right before earnings, here it was 3 days before earnings, boom, broke out on pretty low volume as well, and then got a huge volume entry as the stock broke out even higher. Now, we're expecting, since it has such significant volume after earnings last quarter, as we break into next week, we expect some of that volume to really spike up. And as that volume spikes up with such low volume selling this stock off, you're going to see this stock rally very quickly off of this bottom here. Had a really nice close to the day. and I really think that this stock can get going next week. I was surprised to see it drop so much today, but I do think it's just one of those things that people really just didn't turn their attention yet to earnings, and I think starting Monday though it's going to be time to look at those earnings positions, and this is a company that's definitely very undervalued moving into earnings. We took 2 exits on 2 positions for some slight losses today. As the market was starting to sort of implode, we looked at our positions in Urban Outfitters and Apple. Urban Outfitters, we tried to get a nice little retail rally on this stock yesterday and just did not happen. And that stock looked like it was going nowhere in the near future, so we took that off. And then we've been holding Apple for a little while, and really just thought this was going to take off as we move closer to earnings season. Has not. The stock dropped all the way down to three something 354 today or something like that. So a very very significant drop for that stock today. Sorry, not 354, 334, and we exited that one for 1.3% loss. But we are looking to add a lot of new positions with our new equity analytics, which I'm going to talk about here for a second. So this report that we put out today was it's about Q1 fiscal year 2011 earnings season. We took basically every company that's reporting for like the next 5 weeks. We kind of trimmed it down. We had some, we obviously have some, various indicators that we like to just kind of weed out some companies that we just don't even want to look at because it's just not going to be a waste of our time. They're not going to move, and they just don't have the sort of market cap or the sort of average volume to really be anything interesting to us. But after that, we took 2 scores. We determined a growth score for each company, and then we took a value score for each company, and we combined them together. And we said, if you have a high growth score, we're looking for companies that have a lot of growth potential year over year, but yet still have not really made that move or still have some pretty significant undervaluation. So we're looking for companies that are going to grow, but then also haven't really priced in that growth all the way yet. And we found a lot of companies that really worked into that favor. In the top 3 sectors that we found, we had energy, agriculture, and regional financials. And energy, agriculture have been pretty strong sectors as of late, but specifically inside those sectors, not every company has jumped as much as your Chevrons, your ConocoPhillips, your ExxonMobils. BP was a laggard for quite some time. We were able to play that last week, and we found a couple energy companies. One of them was Complete Productions. We have another one on that list, and we have top 5 picks for large cap, small cap, mid cap. We have top picks for every single industry. What our top pick is for that industry. This is a very, very intricate report. A lot of analysis went into this. This is a report that I would highly recommend you check out. And it is available for free for anybody that signs up for a trial membership. So if you're not a trial member, you don't even have any interest in the Oxen Group, you want this thing, just sign up for a trial membership on our site. Just go to www.theoxengroup.com. We got a tab that says "Are you new/trial?" Click on that. Fill out the little box, and you'll be able to view this report for free. And I really think it's going to be a very, very successful report. We've got, we have 15 selections that are pretty well analyzed. We've got top picks for every industry. I mean, you're going to be able to find a stock that you're going to like in that report that really is going to have some really significant growth. I mean, we already saw Complete Productions jump 8% from off its bottom. We've got a stock already lined up for Monday off that report that you'll be able to identify. And this is a really significant report that we think you'll really enjoy, so definitely check it out. For next week, it's earnings season. It's all about that for us. I mean, it should that be what it's all about for the market too. There is a lot of economic data coming out next week. Got retail sales, Fed beige book, CPI and PPI, business inventories, and then your usual suspects. But I do think we got the government shutdown still looming. We got high oil prices, and they will still continue to have an effect on the market. If oil prices go 120 next week, then you can kiss goodbye any kind of rallying off earnings because it's just not going to happen. So you're going to have companies that are going to specifically rally, but we're not going to have a market-wide rally. And that's where it's really, really going to come into key in your stock picking. You want to pick stocks that have really good growth, are undervalued, aren't going to drop a lot even if the market moves down, could rally even if the market's moving down. That's where kind of some of your earnings plays will come in. Into play. So please check us out at www.theoxengroup.com. Email us at contact@theoxengroup.com. Call us at 1-800-709-1160. Be a part of our 70% plus accuracy.